Since it's time, let us begin the Hitachi Ltd. The result announcement for fiscal 2017. Now, our presenters here is that Mr. Mitsuaki Nishiyama, Senior Vice President and Executive Officer, CFO. In the same group, the Tomomi Kato, General Manager, Financial Strategy Division. Brand Communication, General Manager, Mr. Yasuo Hirano. Now, in regard to the overview about the results, Mr. Nishiyama will present.
Well, then, allow me to present the outline of consolidated financial results for fiscal year 2017. Let me use the PowerPoint slides to explain. First of all, page 5, slide number 1-2. If you could turn to that page. This is the summary profit and loss. Top line revenue. Fiscal year 2017 was 9.368 trillion. Year-on-year, 2% increase, 102% of last year. Hitachi Logistics, Transportation, Hitachi Koki reorganization was conducted, and because of that, there was an increase of 2%. Adjusted operating income, 714.6 billion. The ratio is 7.6%. Year-on-year, 127.3% increase. That's a 22% increase year-on-year. EBIT of 644.2 billion. Second from the bottom, net income attributable to Hitachi stockholders, 362.9 billion, plus 131.7 billion year-on-year. So 7.6%, 714 billion. This is a record high. And net income, 362.9 billion, is also a record high. Now, as to the dividend. Year-end dividend for fiscal year 17 is 8 yen. It was 7 yen for the interim last year. And so together with the interim, for the full year, we're going to pay a dividend of 15 yen. Next slide, 1-3. This is factors affecting changes in revenue and adjusted operating income. This is a macro level analysis. On the left-hand side, revenue analysis is given. Downward arrow, impact of reorganization. This was a negative 355 billion. Hitachi Construction, Hitachi Chemical, and or rather Hitachi Construction Machinery, Hitachi Chemical Industrial Products reorganization. And foreign exchange, 165 billion. Business scale expansion, 396.3 billion. Now, on the right-hand side, adjusted operating income, portfolio reorganization, 32 billion. This is a negative factor. But foreign exchange, plus 23 billion. Excluding these, profitability improvement, 136.3 billion. So this is year-on-year, 124%, up 24% year-on-year. And getting back to the left-hand side, business scale expansion. Because of impact of reorganization, foreign exchange, excluding these, business scale expansion was up 4% year-on-year. So on a net basis, this is increase in revenue. Moving on to the next page, slide 1-4. This is by region. Second from the top. Second from the right column. Overseas ratio was 50%. It was 48% back in fiscal year 16, so there was an increase of 2% year-on-year. As you can see, year-on-year comparison, 98 for Japan, 107% of last year for outside Japan. In particular, there was an increase in China, 112% of last year. Excluding China, ASEAN and India, 112%, North America, 103%. So up 3% year-on-year. Europe was 99% of last year. It apparently is a decline, but if we exclude forex fluctuation or reorganization, Hitachi Koki's reorganization impact, excluding that, it was actually 113% of last year. Now, as to the breakdown, China, uh, 11% as opposed to 10% last year. Asia, 11%. North America, 13%. So overseas ratio in these regions has risen. 1-5, summary of consolidated financial position and statement of cash flows. Total assets, 10,106.6 billion. This is up 442.6 billion yen increase. Because of M&A, assets increased, and we also made proactive capex, and because of these factors, there was an increase. On the other hand, we have improved on our working capital. So interest-bearing debt, there was a decline of 126.3 billion. CCC, fourth from the bottom, cash conversion cycle, 69.7 days. The medium-term target was 7 days for fiscal year 2018, so ahead of the medium plan by a year, we were able to hit 70 days. And equity ratio, shareholder equity ratio, 32.4%. This was an improvement year on year. A DE ratio was 0.23 times. In the past, it was the highest in 2008, 1.29 during the Lehman shock. But now it has come down to 0.23 times. So our financial makeup has improved. ROA at the very bottom, 4.0%. Last year, it was 3.3%, which was below 5%. In the medium-term business plan, we are to bring this above 5% in fiscal year 2018. So we have reached that level of 5%. 4.4% was the number in 2011, which was the past record high. But this time, we have been able to exceed that and achieve a new record high. So profitability improvement, as well as cash flow improvement, and asset turnover and efficiency. We were able to make improvements on all those fronts. Cash flow statement is given at the bottom. Cash flow from operating activities, 727 billion, margin 7.8. Cash flows from investment activities, negative 474.3 billion. M&A, as well as industrial equipment, Saluaire. These M&As are included. Hitachi Chemicals M&A, there was outflow of cash, so there were a lot of outflows of cash. Free cash flow was 252.8 billion. We were able to achieve that number. Moving on to 1-6, revenues, adjusted operating income, and EBIT by business segment. Overall, information, telecom, social infrastructure, industrial systems, construction machinery, they all contributed greatly to increase profitability. Starting from the top, year-on-year comparison, information and telecom systems, IT platform and products had further structural reform. There was narrowing down of the product lineup in these areas. As a result, there was some decline in sales, but system integration business in the Japan market increased, so 1% increase year-on-year in revenue. On the operating income side, SI profitability improvement was seen. IT platform and products structural reform proceeded. Because of these factors, 36.2 billion yen improvement year-on-year in adjusted operating income. Moving on to social infrastructure and industrial systems. Railway systems in the UK saw an increase in revenue. Saluaire acquisition contributed to sales increase of industrial equipment. As a result, 2% increase year-on-year. Adjusted operating income, 38.5 billion yen increase year-on-year. Elevator business in China saw a decline in average sales price, an increase in material, but power, energy, industrial equipment, and so forth saw profitability improvement. So as a result, 38.5 billion yen increase year-on-year. EBIT improvement of 121.2 billion. And last year, posting of a 66 billion yen impairment loss in power and energy business, but that is eliminated this year. So including operating income and non-operating income, there was an improvement, and EBIT rose by 121.2 billion. 1-7, electronic systems and equipment. Hitachi Kokusai Electric, Hitachi High Technology, semiconductor production equipment had increase in sales. Hitachi Koki's reorganization was a negative factor, so it was 93% of last year, a decline year-on-year. Adjusted operating income, on the other hand, Hitachi Koki's was deconsolidated, but semiconductor production equipment sales increase contributed. So as a result, 5.3 billion increase in adjusted operating income. Construction machinery, in terms of revenue, centering around China and overseas markets, there was a sales increase. Acquisition of Bracken and HE Parts, they were consolidated, so up 27% year-on-year. In line with that, adjusted operating income increased by 66.2 billion year-on-year. Moving on to 1-8.
First is high functional materials and components, 13% up year-on-year. Electronic products as well as automotive-related products sales increased for this area. On top of that, Hitachi Chemical, PM Technology was now being integrated and consolidated, and 30% year-on-year growth on revenues. According to that, adjusted operating income also was up 1.9 billion. EBIT was down by 24.6 billion, but the reason is that there are some impairment losses posted in Hitachi Metals, and also in Hitachi Chemical there are some penalties posted related to the competition law related expenses, and therefore EBIT has declined slightly. And regarding automotive systems, the sales was increased in China. That was a major positive impact on this area. On top of that, the sales to US had decreased, and therefore the increase was only 1%, very small. Operating income was down 6.7 billion yen year-on-year, which is that the profitability related to Credion deteriorated of a car information system, and also sales decreased in North America. As a result, adjusted operating income was down by 6.7 billion year-on-year. Now, EBIT was down 23.4 billion. This is because that in the previous period, there was the gains of the disposal of the real estate that was posted, and which we do not have that impact this year. Now, moving on to 1-9, the smart life and eco-friendly systems. And the revenue was down by 3%. This is because that a change of accounting method to a net basis of revenue for the procured products in overseas. However, there were some cost reduction impact, and therefore the operating income was up by 2.6 billion. For the others segment as well as financial services segment, these were also impacted by the reorganization of Hitachi Transport System or impact of reorganization of Hitachi Capital. Moving on to 1-10 and beyond, I would like to elaborate on the topics. First, on 1-10, this is the progress of Lumada business. In fiscal 27, 2017, the initial target for the revenue of Lumada businesses was 950 billion yen. That was a projection. And actual results was 1,006 billion yen. That was increase of about 6% of the target and 12% year-on-year growth. Particularly for number one, Lumada core business was grown from 120 billion in 2016 to 230 billion. And in FY 2018, 1,070 billion was its projected initial target was 1,050 billion yen. However, we are expecting 20 billion yen upside because of the better progress than expected, and therefore 1,070 billion is expected. That is associated with mostly the core business, which initially was expected to be 290 billion, but it is expected to be 310 billion, which is an about 80 billion yen increase compared with 2017. Now, moving on to 1-11, there are some topics related to strengthening the business toward the growth. This is the summary of what we have done in FY 2017, and also major items of the business portfolio transformation is also described as well. Moving on to 1-12, there are two major topics related to projects. First is the nuclear power project in UK called Horizon Project. In the third quarter result announcement, the GDA, which is the certification for the design and spec, was now being obtained. However, which we are currently negotiating with the British government for the financing support. And criteria for business continuity, there are three listed on this table, on this slide. In order to fulfill these three conditions, we will be pursuing a negotiation with UK government. The second topic is related to thermal power project in South Africa, which we are taking appropriate measures in the arbitration procedure. Now, for the slides 2-1 and beyond, we are disclosing the forecast outlook for FY 18, and the revenue is 9,400 billion yen, which is 31.3, almost flat. And adjusted operating income is going to be 750 billion yen, which is 8%. And the net income attributable to Hitachi Ltd shareholders is about 400 billion. And operating margin of 8%, which was and also 400 billion yen for the net income stipulated in our medium-term management plan, is in line with this one. So 700 billion yen of EBIT, which is the increase of 105.7 billion yen, and the net income of attributable to the shareholders of 400 billion is an increase of 30 billion yen. Assumption is that the foreign exchange rate is assumed to be 105 yen to the dollars and also 103 yen to the euro. Moving on to 2-2. We are disclosing the changes in revenues of FY 2018 vis-a-vis FY 2017. First is revenues. Because of the Kokusai Denki, 280 billion yen, 180 billion yen is expected. Impact of reorganization Hitachi Kokusai Electric is 185 billion yen. Foreign exchange rate impact is negative 160 billion yen. And when we exclude that, then a business scale expansion and others are considered to be 376.3 billion yen. So we are expecting 9,400 billion yen on the adjusted operating income because of the Hitachi Kokusai Electric reorganization. The income is down by 25 billion, and foreign exchange rate impact is expected to be 30 billion yen. And the other profitability improvement is expected to be 90.3 billion yen when you exclude extraordinary items, and it is going to be 14% increase. That is our target. Moving on to 2-3 and 2-4 are the segment revenues and adjusted operating income outlook. By segment, the third from the top, which is electric systems and equipment, 92%, which is 8% down year-on-year. Hitachi Kokusai Electric deconsolidation is increased for both revenues and adjusted operating income. When we net out this impact, and net effect is going to be positive growth for this segment. By segment, the electric systems and equipment will be the only one which will see a negative growth. However, for the other segments, we are seeing positive growth. That is all from ourselves.
We would like to move on to questions and answers. So, though time is limited, for the same of the proceedings, we would like to take questions from the media, and in the latter half, we would like to take questions from investors and analysts. We will bring a microphone to you, so please state your name and affiliation before asking a question. So, from the media, are there any questions? Question. I have two I would like to ask. Question number one. Right now, many listed companies are announcing their performance results. They are either up or down. And you have now a forecast of record high operating income. Given the risks that may exist with respect to the business environment for the fiscal year, what was good, what was bad? That's my first question. Second question is as follows. Operating income ratio of 8%. You have met the commitment. And top line, you have been aiming at achieving 10 trillion yen for the top line. So given the commitment and the forecast that you have given, well, you are reorganizing group companies, reviewing portfolio, taking proactive countermeasures. Will they continue? How proactive are you prepared to be in taking such measures? Now, fiscal year 2018, the business environment. On that, what is noteworthy is, as was shown in our variance with the plan for FY17, for some of the products-oriented business, the material cost has surged, and we were impacted by that. In each of the businesses, measures were taken, cost reduction, for example, passing the price increase to the sales price. But I think this trend will continue, the trend of rising material cost. And another factor in the economic environment is such that there's impact from trade. Trade comes between countries. There's trade friction. If it deteriorates, then it will have impact on not just one single country, but on others as well. There will be negative impact on a worldwide basis. So economic sluggishness, risk-off will lead to cheaper dollar or higher yen, in other words. That could possibly happen. But so far, we have pursued business structural reform to drive profitability. We have been withdrawing from low profitability businesses. We have prepared ourselves for that. So we will continue to closely monitor the evolving business environment. We would like to harvest the fruits of the measures that we have taken so far. Now, 8% operating income ratio, bottom line 400 billion, committing to the targets in the medium-term business plan. For fiscal year 2017, as you saw, profitability and asset efficiency turnover have risen. So I think we are seeing the results of improvements. So portfolio restructuring efforts and business structural reform endeavors and operational cost reduction measures have been taken, and I think we are seeing positive results of that. I think we now have a good view to achieving 8%. But Compared to the global top companies, our profitability is not yet there, not up to their standard yet. So we need to clear the first threshold of 8% and go further beyond. Now, as to the size of the revenue, our target is 10 trillion yen. We're not necessarily bent on achieving the top line only. Rather than that, our primary focus is improving profitability. That has been our thinking all along. 10 trillion yen. So in May 2016, we announced the medium-term business plan, and revenue target was 10%, income ratio 8%. Forecast of 9.4 trillion, we came out this time. There's a 0.6 trillion yen gap. And one of the factors behind is forex fluctuation. There was negative 100 billion yen impact in revenue because of forex fluctuation, and portfolio reorganization impact. Hitachi Koki, Kokusai Electric, these are the reorganizations of portfolio after the announcement of the midterm business plan. 630 billion in impact. So together, negative 530 billion impact was seen. On the other hand, certain number of M&As have been conducted as part of our measures, initiatives. So rather than trying to embark on very large M&As, we would like to have M&As, mergers and acquisitions, to supplement our businesses. So rather than pursuing just a top line, we would like to focus more on profitability. That is how we would like to manage our businesses.
Two questions. First is nuclear power station business. Well, Toshiba, related to the nuclear recycling business, has shown that the desire to integrate the operations among the three companies. What is the progress to this extent? Related to that, I'm sure that still in the planning stage. However, what about the nuclear furnace business, reactor business? What is your take on that particular business? Nuclear reactor business. And also, let me confirm, what is the sensitivity of the foreign exchange rate in terms of revenues as well as adjusted operating income? What is the assumed or average foreign exchange rate? And if you could share with that, be appreciated. Answer. For nuclear reactor, recycling and the reactor business of nuclear power, nuclear recycling and also nuclear business reorganization, there's no specific plan at all. And in regard to your second question, which is the foreign exchange rate assumption, in FY 2018, which means that in March 2019, the dollar is assumed to 105 yen to the dollar and 130 yen to euro. And exposure is that 1 yen change to the dollar is that 180 billion yen for the revenues and 3 billion yen for the adjusted operating income. And the 1 yen change to the euro is 6 billion yen for the revenues and 1 billion yen for the adjusted operating income. That's the sensitivity. Thank you very much.
Any other questions? Question. There are 3 questions. Question number 1. This may be close to what was asked already, but I would like to ask about risks. Earlier, you talked about macro level risks. You gave a list of such potential risks. Conversely put, for each of the business areas, are you not seeing much of a risk? Is that correct? If you are seeing risks, which specific business areas or divisions? Question number 2. Last meeting or 2 meetings ago, I asked about whether your capability overall has risen as a company, and I thought I received a positive answer. But after this performance announcement, what do you think? is happening to your capability? Is it up? Sorry for the abstract question. And question number 3 has to do with the nuclear power business in the UK. Strike price, if you can give us an idea as to what the strike price is going to be, I'd appreciate it. You talked about construction material cost rising. With that, strike price, the acceptable level of strike price may be changing. So if that is the case, if you could please share that with us. And another clarification, taking this off balance, and the number should be close to 0, I would understand. But would it be outside of the consolidation and turned into an equity method affiliate? Is that acceptable? Answer. So to address your first point, are there any specific risks that we see in each of the businesses? To answer that, of course, there are risks in all the areas, and that is why we're taking measures to pursue business structural reform and cost reduction initiatives. As I said earlier, products-related businesses are affected by material cost rise. Material prices are hovering high, and so if they are to further increase, we will have to continue to reduce cost on our side. One of the major areas is automotive systems, social infrastructure, and industrial. Elevator business, for example. These divisions are impacted by material cost rise, and high functional materials and components, they're also affected. And whether or not we can pass the increase in price to the sales price, how quickly can we do that? We have to closely consider that. And social infrastructure and industrial systems. There's one large project remaining in Middle East. So I think we need to continue to closely monitor that. By the end of fiscal year 18, the last large project will be concluded. Now, other than that, overall, if we can stick to the current plan, we believe we can hit the targets. Now, has our capability risen overall as a company? That was your second question. Against the current plan, there are ups and downs somewhat, but overall, I think the baseline of our capability has risen overall. Each of the business units in fiscal year 2017, their operating income ratio was less than 5%, some of them. But in fiscal year 18, each of the business units has seen over 5% income ratio. That is the forecast and the plan. But then, is this satisfying for us in terms of the level of capabilities? Not at all. We are to be within global top companies. So we have to do more in order to raise our profitability. So we need to pursue improvements that we have planned. We need to take steps and initiatives, structural reform and cost reduction included. And I think we need to continue to work hard on that. The nuclear power project, Horizon project in the UK, the strike price was asked, and taking this project off balance sheet. On that, we are in the process of negotiating with the UK government, so I would like to refrain from making further comments.
Time to close this session is approaching, and therefore, for the members of panel, this is the last question. Question. 3 questions. First, for information and telecom businesses, operating margin year-on-year 1.7%, 9.4% this year. What is your take on this particular business? What is the major reason and 9.7% projected for next year. What is your initiatives that you're going to take on? And for information telecommunication systems, forecast is that the revenue is almost flat for the next year, and yet operating margin improves. Well, operating income rises, and are you focusing on profitability for this business? Answer. I would like to talk about the information telecommunication systems separately into segments. And if you could look on page 26, I would like to answer to your question. First, for the front business, which is performing quite well, the project management, which we've been actively implementing, have been taking roots in the practices of our company. In the businesses belonging to the front businesses, our strategy have been taking deep roots in the front business overall. So SI project management are now well put in place. Therefore, in FY 2017, 10.1% growth, and in 2018, 10.5%. So there is a projection which we announced this time. That increases the very basis of profitability and also contribute to the stabilization of the profitability. And the second segment is IT platform, which is a 4% last year and 6.5% last year, and we're going to be 7.7% this year. IT platform products area is first lights and the telecom network area, and also IT network products. Also, we are narrowing down the profit products, and we are solely narrowing down to the highly performing products with a high profitability. So, and storage business, which is a flash storage, is performing quite well. New products are to be implemented on schedule, or were actually launched in the market as is scheduled, and also we were able to achieve or launch faster than the plan. So we were able to improve the profitability because of that reason. Thank you. Second question related to hard business, again related to the information and telecommunication systems. Flash storage, you narrow down the products, and for the lower profitable products such as mainframe products, do you have any specific ideas that you were able to disclose? Answer: we were able to narrow down the products already. For mainframe, we've narrowed down our product lineup, and also for the telecom network, we had a drastic, very bold restructuring as well by focusing on the profitability, and that we are going to continue to do. But storage is the strength of the business. The new area is a flash storage. We were successfully able to launch the products line, and we'd like to use that as a core for our hardware products. But again, solution will have to be enhanced on a global basis. So selling hardwares or doing SI services are not the only thing which we will do. Bringing hardware to the customers, but we will be sitting closer to the customers and providing a comprehensive lineup of hardware and software, and providing the whole solutions to the customers so that we can develop our business on a global basis. Thank you very much. Last one question. Related to front business in FY 2018, AI or IoT or Lumada business that are actually better progress than your initial projections. So AI or IoT combined with your solutions, would that be one of your focus area? Answer: yes, that will be the overall growth. It is not just limited to information and telecommunication systems. It will be related to the overall group companies. That will be the driver for all the companies. Well, Lumada business progress, like I reported earlier, is still very small. So size of the business is still small. However, by growing the core, for overall Hitachi Ltd, we will be able to enjoy overall profitability. So a core growth of a Lumada core business is the key driver for us.
Next, to continue, we would like to take questions from investors and analysts. Any questions, please? Thank you. Question. There are two I would like to ask. Question number one has to do with the actual performance. Corporate items and eliminations compared to the January announcement, there's some variance. So the buffer that you originally assumed did not materialize, and so did that contribute? If you could share with us a breakdown, please do so. And according to the new year guidance, corporate items and elimination compared to last year's actual, there's a decline of 36 billion as a factor. So what is the buffer included, if you could share that with us? Now, another question has to do with social infrastructure and industrial systems new year guidance that was given. Adjusted operating income of 49 billion increase. I think that is your plan. So according to the appendix material, when you break that down into sub-areas, revenue is not assumed to increase all that much. So how are you going to raise the profitability? What's going to be the measures or plan? Answer. So the previous fiscal year 17, as you said, operating income risk of 30 billion. That was incorporated as a risk, as you rightly said. Compared to the last outlook that we gave, 1-6, 1-7, if you could take a look at operating income, social infrastructure and industrial systems, negative 9.4 billion, automotive systems, 3.4 billion, high functional materials, 5.1 billion. There were deteriorations. Other than that, information and telecom systems, Hitachi construction machinery, and others saw improvements. So the risk that was factored in on a net-to-net basis remained. There were areas that saw improvements, and they canceled out the negatives. So that was what happened in 2017. For fiscal year 2018, operating income for that risk buffer of 20 billion in the operating income is assumed. For each of the business units and areas, there are risks that are not yet clear and ascertained, as was a question from the media earlier. Overall, the general business environment contains some risk factors, considering that 20 billion in operating income, and that is reflected in corporate items and elimination. Fiscal year 18, social infrastructure and industrial systems, 49.4 billion. The drivers behind that, you asked. Roughly speaking, industrial and distribution business is going to improve through business structural reform. That is what we are assuming. And low profitability projects will be withdrawn from, and such efforts have continued and will continue. And because of the positive impact from that, there will be a major improvement. Railway, industrial equipment, I believe they can drive their sales quite successfully going forward. So that is why we are planning an increase in revenue. Question, I'm sorry for asking some details, but corporate items and elimination, in terms of the number 30 billion, there's an improvement. Other than the buffer not realizing, there was another 10 billion impact. Is it important? If so, please answer why. Answer. Oh, you're asking about fiscal year 17, the previous fiscal term? Yes. Expenses at the head office were brought down. suppression of expenses at the head office continued, and so as a result, it came out as a positive factor. And proactively, we are making investments into R&D and development, and the timing has changed, and some is brought into fiscal year 18, but no major structural reasons. Questions. So for New Year, 20 billion yen buffer, but deterioration of 36.3 billion. And 20 billion of impact. That's because of deterioration that you assume may happen in the business environment. Correct.
Question, please. Question. 3 questions to the point. First, in FY17 versus FY18, restructuring costs and impacts. If we're able to quantify and disclose, we would like to hear. And social infrastructure business that you mentioned that one of the benefit is coming from the restructuring impacting. If you were able to disclose a specific number, it'd be appreciated. The second one, as you explained on page 15, well, in regard to the data, if you could actually disclose the breakdown more, be appreciated. And on 28, in regard to the litigation, that be appreciated. And page 28, a number of subsidiaries are now being disclosed, but as I believe that company has already announced the strategy to reduce the number of subsidiaries to a half level. And is that going to be something that you're going to implement this year? And what is the image that you're going to implement this year in terms of number of subsidiaries and affiliates? And from the strategic point of view, what is your strategic view on reducing the number of subsidiaries? To the extent you can disclose, be appreciated. Thank you. Answer. First, for the restructuring cost as well as the impact, and restructuring related cost in FY 2017 was posted at 64.3 billion, and FY 18 is about 50 billion, which we are projected in this plan. And for the impact of restructuring, reorganization on year-on-year basis, for FY17, 15 billion impact year-on-year. And for FY18, compared with FY17, 14 billion is projected. And related to the second question, on page 15, as I remember, this is related to South African project that you would like to hear. Understood. Now, we are in the process of arbitration. We are bound by the confidentiality agreement, and therefore we are simply following the instructions of the arbitration procedures, and we are taking appropriate measures, and therefore we would like to refrain from disclosing any detail about this arbitration. In regard to the number of subsidiaries, Hitachi Chemical, Hitachi Construction and Machinery, M&A had happened, and therefore a number of subsidiaries has increased. 879 companies are under consolidation now. Now, when we exclude the listed companies, and still we have 571 subsidiaries, unlisted subsidiaries. Everyone is actually the fully owned subsidiaries. So we'd like to first try to work on the reduction of numbers for this 570 companies first. That will be the first target. And to the extent possible, we'd like to merge into our company, or perhaps one country, one business, one subsidiaries, and if there are multiple businesses belonging to the same business in the same country, and we'd like to integrate. But objective is not to decrease the number of subsidiaries. It's for the improvement of efficiency, improve the governance and compliance, and try to reduce the compliance risks. And these are also our objectives as well. So through that exercise, the indirect business operational efficiency need to be improved, and ultimately in our management index, we will include the indicator to show some indirect business efficiency. Of course, there will be several other projects, but this is considered to be one of the important projects, and we are preparing the detailed picture about this plan. Now, in 2018, we will be drawing up a very detailed plan, and we will implement as much as possible. But of course, the majority of that will be materialized in FY 2019 and 2020. And therefore, execution period lies in 2019 and 2020. And we would like to enjoy the full benefits in FY 2021. So that is a plan at this point. Thank you very much.
よろしいでしょうか。その他ご質問ございますか。
Any further questions? Question. There are really 3 questions I would like to ask. Question number 1. If you could answer each of the questions as I raise them. First, actual performance, adjusted operating income for information and telecom systems. Compared to the plan in this business unit, there was an upside. What is the factor background behind that? Social infrastructure, 94 trillion, it was not met. Automotive, 3.4 billion. You made a downward revision to forecast, and then it changed again. So what were the factors behind that? Are they tentative or structural? So for those 3 business units, if you could please comment. Answer. 1-6, 1-7, if you could look at those slides. The last forecast was given, and compared to that, how has it changed? First, on information and telecom systems, the last forecast compared to that, improvement of 10.2 billion. And that's because Japan's SI business was robust. Compared to the last forecast we've given, profitability or revenue, there are so many projects in this area. But the risks that we assumed did not materialize, or there were some improvements as well. So mainly for the Japanese SI business, because this was robust, there was an upside. And IT platform business, flash storage, since the 3rd quarter and onward, or rather, since the 4th quarter and onward, sales were generated according to plan with these new products. It was quite successful. And so Japan business in Japan was better than expected. So those were the factors. And with respect to social infrastructure and industrial systems, the main factors are such that, as I said earlier, EPC, large-scale projects, fiscal year 15 and onward, we have not received orders because we decided to withdraw from this domain in the second half of 2014. We're not receiving any projects, so we're now winding down the existing projects at the moment. But there's work still remaining. The last project that I talked about in the Middle East, where construction is ongoing, we have allocated cost for that. This is related to the construction contractor locally. Because of extension of the construction period, there was additional cost that had to be allocated. 90% done. The remaining is 10%. So by the end of 2018, it's to be completed. And on the automotive systems, in North America, well, in the last forecast, the business was sluggish in North America, and sluggish sales in Clarion. Those were the factors that were incorporated in the last forecast. A productivity enhancement in North America that we have been working on since fiscal year 2017. And we did include that factor in the last forecast, but productivity enhancement initiatives are somewhat lagging behind, and they have somewhat been factored in. So compared to the last outlook, a deterioration of 3.4 billion. So structural versus tentative, are they structural or tentative? For information and telecom systems, these are structural factors that are contributing to positive results. And automotive, these are tentative factors. Automotive productivity enhancement, or rather social and infrastructure, there are tentative. Automotive systems, I think we need to continue to watch productivity enhancement. Well, thank you. My second question, your EBIT plan for this year. Adjusted operating income plus 35.3 billion, 105.7 billion. There, between EBIT and adjusted operating income, there's some gap between 70 billion or so. If you could please provide commentary. Answer. So operating income on an adjusted basis and EBIT. So non-operating loss and profit, I think I should give you the breakdown. That's most straightforward. Fiscal year 2017, excluding interest cost, non-operating expense, it was 70.3 billion in total. In fiscal year 18, the total is assumed to be zero on a net basis. To give you the breakdown, fiscal year 17 breakdown is as follows. Business reorganization cost. So business reorganization profit and loss, it was plus 9.7 billion. Structural reform, 62.3 billion. And plus equity method affiliate, 62.4 billion. Other than that, loss of 78 billion. So on a net basis, 70.3 billion minus. For fiscal year 18, business reorganization, plus 30 billion. And structural reform cost or loss, 50 billion. And equity method affiliate, about negative 60 billion. And other than that, 40 billion yen loss. So on a net basis, zero. And that is why the gap has narrowed and it's zero. Operating income, 750 billion, EBIT 750 billion. That's the plan that we have. I hope I answered your question. Thank you. Last but not least, social infrastructure and industrial systems. For each of the businesses there, if you can give us a forecast qualitatively. That's page 27. By each BU, there are quite a lot of BUs that are planned for negative growth, declines. And so what's your thinking on each of the businesses? Railway, it's pretty clear what's going to happen. If you could comment on other BUs. So nuclear power BU, nuclear energy BU, the timing of receiving orders for projects and so forth, because of the timings, there's going to be a slight decline. And now industry and distribution BU. Structurally, this is not expected to grow all that much. There's still low profitability business. Rather than driving revenue, we should work on product mix and business mix. And by so doing, we should focus on profitability. That is the plan. And that's how you see the number as is stated here. And water BU, this is going to shrink somewhat year on year. This as well has to do with increase and decrease in the number of projects depending on the term. And industrial products BU, on this, we acquired a Saluair. Inclusive of that, we are strengthening our industrial equipment business, and that is what we are looking to do. Saluair's sales were somewhat down, but for fiscal year 2018, the status of orders is quite successful. Orders are up quite nicely. So we are expecting an increase in sales there. And what was acquired through the acquisition of Saluair, we acquired new channels, especially in North America. We would like to leverage such sales channels to expand the sales of Hitachi Industrial Systems products. And Saluair, on a 4-year basis, it's going to contribute a sales of 50 billion. And building systems BU, for this, in terms of the number of units sold in China, it's to be flat. But the average sales prices are down, which is affecting this business. So it's not expected to grow all that much. So fiscal year 18, year-on-year decline is planned. But profitability-wise, expansion into Asian markets, growth in Asian markets, and in China as well. High-end products, orders for high-end products should be secured so the profitability can be maintained. And that is our plan. For railway business, IEP in the UK, Italian railway, they're going to have projects that are going to be on a full-fledged basis. They're going to have full production activities, and so they should be doing well.
お時間でございます。最後に一問だけお受けしたいと思いますが、いかがでしょうか。
One last question, please.
では、窓側の一番前の方。
三井住友アセットの島田と申します。
Question, brief questions. 2 questions. First, free cash flow for this year. Net profit is 400 billion. We would expect that a cash flow could be 0 because you might use for everything for M&A. So let me confirm. Dividend. For the fiscal year ended, the payout was bumped to 20%. Mitsubishi Electric increased the dividend payout as well. Now, what is your concept toward the dividend? I do not recommend the buyback, but I would expect that a dividend could be increased more. Let me check these 2 points. Answer. Regarding free cash flow, whether the company may make investment into a major M&A or not, it's just a matter of timing. For free cash flow, vis-a-vis the plan in 2016 and 17, and the medium business plan, well, first year, 16, 17, and 18, that was a 3-year, and after that, the remaining free cash flow is going to be 300 billion yen, and that was an initial plan. And on that, in FY 16 and 17, we were able to exceed the free cash flow, exceeding 300 billion already. Then, within this range, shall we make an investment within this range, and the company may not involve in an investment beyond that? That is not the case. If there are great opportunity, we will be endeavoring into major investment, and with that, perhaps on a single year basis, there might be positive or negative as well. But the ratio, debt to equity ratio, for example, disposal of assets or reorganization of portfolios, business portfolio, and also we've disposed some of the investment securities and also disposal of real estate. We were able to reduce the debt ratio. We were able to have lower DE ratio, which proves that we have some room for further investment. So we will be carefully monitor the financial positions, and if needed, we will be endeavoring into the full investment as well. But it's up to the project. We will be closely examine the projects, and when we decide that it's necessary, we will be making a necessary investment. We've invested for the purpose of enhancement of the businesses going forward, in order to enhance the delivery capabilities to the front side of the Rumada project, for example. Also for each and every product area, that if there's a great opportunity, we'd like to do some investment. Now, regarding dividend payout, dividend is the major instrument for the return to shareholders. 20 to 30% payout is our rough target per se. So annual payout on consolidated basis is about 20%. So we are at the bottom of our desired range. That's just an outcome. But this is to make a investment for the future growth for sure. And we've actually grown in business and we improved profits. And as a result, we've tried to expand the dividend for a steady manner. That's the principle. A follow-up question. For free cash flow, without having major M&A, CCC is actually improving, and therefore 400 billion yen, which is close to net income, you were able to earn free cash flow of about 400 billion yen. You were able to achieve that foundation. Answer. For the certain M&A and reorganization was already projected in our free cash flow projection. So therefore, positive free cash flow is going to be generated in this fiscal year. Thank you.
With that, we would like to conclude the meeting for the media and the investors as well as analysts. Thank you.